What if I told you there's a stock that's been soaring, gaining momentum day after day? A stock that has captured the attention of investors worldwide. Lucid Motors is a luxury EV maker that is aiming to revolutionize the automotive industry with its innovative technology, design, and performance. It's been on an impressive winning streak, defying expectations and raising hopes of reaching the coveted $50 mark. Yes, you heard that right, the $50 mark. Lucid Stock has been on a relentless climb, pushing the boundaries of what many thought was not possible. The electric vehicle revolution is in full swing, and Lucid Motors is leading the charge. Make sure to watch all the way to the end to get to know if Lucid Stock could climb to $50, and in this video, we will share another precious stock that is highly undervalued. So make sure to watch all the way to the end. Let's dive into the recent performance and explore the potential behind this remarkable stock. Lucid Group Incorporated has been on a winning streak, with its stock price surging by the end of June. The stock has seen an impressive 35.1% increase during this period. This recent performance is noteworthy compared to its previous trends and milestones. Lucid is making waves in the electric vehicle market, and investors are taking notice. The surge in stock price reflects growing confidence in the company and its future prospects. Analysts have been closely monitoring Lucid, providing their insights and opinions on the stock. Citi Research recently released an update, assigning a neutral rating to Lucid Stock with a price target of $8. This indicates that Citi Research believes the stock's performance will be relatively stable and suggests a potential upside of $8. The electric vehicle sector has experienced a significant rally, with companies like Tesla, NIO, and Rivian reporting positive delivery and production data. This surge in the broader EV sector can impact individual stocks like Lucid. When the sector performs well, it often creates a positive sentiment and investor confidence in EV companies as a whole. This increased enthusiasm can spill over to individual stocks like Lucid Stock, leading to a price rise. Investors view the success of other prominent EV companies as a positive indicator for the industry as a whole, which can translate into increased interest and investment in companies like Lucid. Moreover, Citigroup has expressed concerns about the near-term demand for Lucid Air EVs and its gross margin performance. While Citigroup acknowledges Lucid's superior technology and recent supply agreement with Aston Martin, they highlight uncertainties surrounding the demand for Lucid Air and its ability to maintain favorable gross margins. These concerns can influence investor sentiment and affect the stock's future performance. Additionally, the potential impact of price cuts on rival EV models is a factor to consider. With competitors like Tesla reducing prices, there is increased competition in the market. Lower prices from rivals can pressure Lucid's gross margins and potentially affect its market share. Investors will closely monitor how Lucid responds to these price cuts and adjusts its pricing strategy to remain competitive. Looking ahead, the upcoming release of the Gravity SUV in 2024 is an essential milestone for Lucid. The success and reception of this new model will play a significant role in shaping the company's future performance. If the Gravity SUV receives positive feedback and generates strong demand, it could bolster investor confidence in Lucid's growth prospects and potentially drive the stock's performance. As for technical indicators, Lucid has a 36-month beta value of 0.99, indicating that the stock is relatively stable compared to the overall market. Moving averages show that Lucid Stock has been experiencing positive trends, with the 20-day moving average at 13.28% and the 200-day moving average at -23.79%. Volatility ratios reveal the stock's fluctuation levels, with a volatility rate of 9.72% over the past week and 6.76% over the last 30 days. Turning to key stock metrics, Lucid Stock has a market capitalization of $16.66 billion, representing the total value of all its outstanding shares. The public float for Lucid Stock stands at 406 million, indicating the number of shares available for trading in the public market. Short interest, which represents the percentage of outstanding shares held by short sellers, is currently at 23.46%. Now, Lucid can be analyzed in terms of its profitability ratios and financial stability. The operating margin, which measures the profitability of the company's core operations, is currently at -426.52%. This indicates that Lucid Stock is incurring operating losses. The gross margin, which shows the profitability of its products, stands at -170.66%. This suggests that the company is facing challenges in maintaining favorable product profitability. Regarding net margin, Lucid Stock has a negative figure of -214.49%, indicating it is experiencing net losses. This raises concerns about the company's ability to generate profits after accounting for all expenses. Additionally, the return on equity, which measures the company's efficiency in utilizing shareholders' investments, is at -87.30%. This signals the low return on investment for shareholders. When evaluating the company's financial stability, it is essential to consider its capital structure and debt ratios. Lucid Stock has a debt-to-equity ratio of 53.99, indicating that it relies significantly on debt financing. The total debt-to-capital ratio is 35.06%, reflecting the proportion of debt in the company's capital structure. The long-term debt-to-equity ratio is at 53.27%, indicating a substantial amount of long-term debt. Furthermore, the liquidity ratio, which measures the company's ability to meet short-term obligations, is 5.24. This suggests that Lucid Stock has a relatively strong liquidity position, enabling it to cover its short-term liabilities. So, Lucid reaching $50 is a question that requires thorough research and analysis. While there have been positive developments and stock price movements, it is crucial to consider various factors that can influence the stock's future performance. Lucid could be the gold in the EV industry, but let me tell you, we have something extraordinary to share. We're thrilled to introduce the sponsor for this video, Gold Mining Incorporated, and it's trading on the New York Stock Exchange under the ticker GLDG. This hidden gem in the gold industry could be the key to unlocking remarkable investment prospects. But before we get into why this company is such a great investment opportunity, let's first talk about the big picture of the gold market and why you should own some gold in your portfolio. Gold has been a timeless symbol of wealth and stability, and according to Saxo's 2023 outrageous predictions, it's poised for a remarkable surge in value. Saxo Bank predicts that gold will skyrocket to a staggering $3,000 per ounce in 2023. Yes, you heard it right, $3,000. This bold projection suggests that gold will experience a monumental rally, defying expectations and leaving investors astonished. Gold Mining Inc. is all about undervaluation, massive undervaluation. And I want you to stick to the pure mathematics of why this opportunity is unbelievable. But before getting into that, let me give you a quick update on the stock price and movement of Gold Mining Incorporated. On July 12th, Gold Mining Inc. stock closed at 94 cents per share, up 0.85% from the previous trading day. The stock has shown positive momentum in the past week, reaching a monthly high of 97 cents per share on July 11th. The stock also had a relatively high trading volume, with over 87,000 shares traded. You might wonder why I'm so excited about this stock and think it's incredibly undervalued. Well, let me explain. The entire company, Gold Mining Inc., has a market cap of $155 million. They own 20 million shares of a gold royalty company called Gold Royalty Corporation. Those 20 million shares are worth $36 million. They also have an 80% position in another gold company called Western Alaska Copper and Gold Company. So if you do the math, you'll see that their market cap of $155 million is almost equal to the value of their stock ownership positions worth $148 million. That means the market values all their other assets for only $7 million. And what are those other assets? Well, they are nothing less than 13 gold projects with a combined amount of 22 million ounces of gold in the ground. That's right, 22 million ounces of gold have been discovered but not mined yet. The 22 million ounces should be worth about $660 million, but the market is valuing them for $7 million. What does that mean for us investors? We can buy into a company worth 5 times more or 400% upside from the current market cap. We're not talking about a premium valuation. And what's even more incredible is that they're not just sitting on these assets and waiting for the gold price to go up. They're actively advancing them and creating value for their shareholders. They have 3 projects undergoing feasibility studies and permitting processes that will bring them closer to production. And what's even more incredible than that is that they're generating dividend income from their position in Gold Royalty Corp., which pays them quarterly dividends based on their royalty revenues from other gold mines worldwide. And what's even more incredible than that is that they have no debt, cash on hand, and a top-notch management team led by experts in the gold mining industry. What's even more incredible than that? The analysts agree with us. They are giving this company the price target of over $5 per share. We're trading at 94 cents per share. So let me recap again so it's easy to understand. We have a gold company called Gold Mining Inc. trading on the New York Stock Exchange under the ticker GLDG. Their market cap is $155 million, even though they have combined stock ownership positions worth $148 million and an additional 22 million ounces of gold resource equivalent, usually worth $660 million, but in this case, it is only being valued at $7 million. Therefore, this company is highly undervalued and could be worth as much as 5 times more or a 400% upside from the current market cap. They have cash on hand, no debt, and an analyst price target of over $5, even though we're trading for 94 cents. You will not find any other company in the world that has a better valuation position than this company. This company is highly cheap and undervalued because its assets are valued at $7 million instead of $660 million, the global median for their types of projects. This is an extreme situation, and it's worth everyone's attention. Gold Mining Incorporated is one of the best gold mining, and it could be a good investment to consider today. By seizing this opportunity, investors can tap into the potential upside of the gold industry and capitalize on the hidden value within Gold Mining Incorporated. The company's impressive track record of leveraging gold price rallies further emphasizes its potential for amplified returns. While risks are inherent in investing, the backing of industry experts, influential shareholders, and the company's visionary leadership adds credibility to this investment opportunity. As you consider diversifying your portfolio, keep in mind the exceptional qualities of Gold Mining Incorporated. With its compelling valuation, growth potential, and bullish analyst sentiment, the company offers the possibility of unlocking substantial returns in the years ahead. However, conducting thorough due diligence and assessing risk tolerance before making investment decisions is essential. You can stay well informed and make informed investment decisions by closely monitoring market dynamics, macroeconomic factors, and the company's developments. Gold Mining Inc. could be the golden ticket that diversifies your portfolio and unlocks significant returns in the exciting gold mining and exploration world. So, if you choose between Lucid and Gold Mining Incorporated, which holds the potential for greater returns in the current market conditions? Let us know in the comments section below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, if you want to know more about other promising investments, I recommend watching this fantastic video. Just click this video right here and enjoy. See you there.